Hey folks, Vic here. I just made a quick video here on a Sunday afternoon here in rainy Vancouver because I just wanted to show how robust the London close trade strategy is. And I say that because this past Friday, which was non-farm payroll day, there were no less than 7 valid LCT trade setups. Of course, I recorded them all in great detail for the members and posted them just for, it's important to go over these things over and over and over and really learn them. It's a great strategy. So let's get straight into it and take a look at a few trades I won't bother with all of them, but you'll get the idea. And yeah, if you like this video, I'd sure appreciate a thumbs up and by hitting the like button, and be sure to subscribe to our channel. There's a button in the lower right corner of the video. Okay, like I say, there were 7 trades that set up on the one day on non-farm payroll day. So let me say right off the bat, you will not be able to take on 7 trades all at once, or you're going to be like totally overwhelmed. But you can filter out the trades so that you only take a few of them, and that's perfectly fine. That's what you should do. You don't try to eat the elephant in one bite here. Now, on a day like non-farm payrolls, things can get very, very volatile. That's a big red flag news event. But the thing about trading the Forex at the London close is that the news is already out. It's been over for 2 hours before we even consider a trade, and 3 hours before we even hit the actual London close. And this is one of the great features of trading the LCT setups. You almost never have to worry about red flag news, with very, very few exceptions. Okay, so let's have a look at the trades. I'm not going to show you all 7; it just takes too long. But I'll tell you about them, though. I want you to know. So on the Australia Yen pair. So what had happened is we had hit this level. See, price had come down. This is the non-farm payroll day right here. This level is when you got to watch. It was a very strong reaction when it broke above it. Like, look at the support. Look at the wicks in here. So just keep an eye on that. It wasn't as clear on the 4-hour chart, but still you can see there was lots of reaction around this level here, and we have rules about watching for these support resistance levels on the higher time frames. On our entry time frame, we had this stretched range where it had gone way beyond it where it normally goes, and then we get into our London close time window, and this circle is where the sell was, right here. Okay, that needed an 11 pip risk, and by the end of the trading day, it was up 6 to 1. I'm not saying you're going to get 6 to 1. I'm not saying that. I'm telling you the power in these things. When you have small pip risk, 11 pips, and you get down to, whatever it was up over 6 to 1 by the end of the day. That's pretty big. Let me show you another one here. Euro yen. Yeah, so here's another one that rallied up. And if you look at the, we're looking for resistance, and we're looking for conditions that set up the London close trade. Do you think that's resistance? It's fantastically good resistance. Look at it. I mean, it's really good. That's, this is all you have to do is learn how to see these levels, okay? If you don't see them clearly, you don't trade. Really simple. So what happens when we get the stretched range on this pair? We get into the London close time window. Here was the sell on this. Like, I'm not making these up. We have like really objective rules for selling these levels up in here. And that was where the fill was. It was right up in here. It needed a 13 pip risk. By the end of the day, it was up over 5.5 to 1. That's a big day of trading, on anything. And this is the thing about the LCTs, is that you get this in a day, right? Let me show you one that didn't. It got going. This is the British pound US dollar, and again, so look at the levels here. Do you think that's a good level of support and resistance? It's really good, right? So it hits it, and when it hit it, let's go to our entry here. So here's an interesting one here. We had to change the entry a little bit, and I have very specific rules for that because we want to keep our risk very, very small, and it was too big by selling it up here higher. So I have another way to get into it. This is one of the things I've done with the new relaunch of the course, is I've completely objectified the stop loss rules. Okay, excuse me, and where you have to get into these trades. So this one needed an 11 pip risk, right? And it had, when this trade was entered, it had this quick bounce up like this, you see, and then it came back down again. This actually was up over 1 to 1 right on this first little bounce. That's how fast they can happen. And then it came back, and then it finally rallied up after that for a 2 to 1. But you know what? I'm not going to call that a 2 to 1. I'm going to call it a 1-to-1, and that's it. And if you get it 1-to-1, I always say don't lose money on the trade. Well, if it came back down, you're going to get stopped out of the trade for break even. Let's just call it, a break even trade. Some people scale out. They take a 1-to-1 on part of their position and they try to scale for higher. That's fine too. But just call it a break even. The New Zealand US dollar pair. This was a losing trade. Actually, we had two losing trades. There was this one and the Euro US dollar. So again, go down to this, your hourly chart. What do you think? Is that a good level? Like this? I think most people can see that pretty easily. That you don't have to try to get really myopic and looking for little tiny things. They should stand out to you. They should be pretty obvious. If I go to the entry time frame, the entry in this pair was right here. Well, look what happened. It actually kept going down, and there was no. Actually, the stop got hit by 1 pip. It went 1 pip below where the stop loss was, stopped out because of this price action here. We would have actually ended up taking this off for break even, but we never had the opportunity to do that. Okay. Now just listen to this, and this is what and what I'm going to say right now is hypothetical, but I just want you to see the power in these very small pip risk setups. On this day of trading, this non-farm payroll day, if you simply took a 2-to-1 reward risk profit, and you saw a couple where there's one that was 6-to-1 and 5-to-1, if you just took a 2-to-1 reward risk profit whenever it was available with no scaling out, there were 5 wins and 2 full losses. 3 of the trades made 2-to-1 reward risks. Okay, 2 of them were break even, and 2 of them were full losses. The overall reward risk for the day was 5-to-1. That is pretty impressive in my book. And again, I'll just reiterate how well you can do by having a solid strategy in place that uses very small pip risk if you know how to handle it. And this isn't. If you don't, you're going to lose everything really quickly. You got to learn to write a very objective and robust setup. And by the way, this strategy has been in place since 2010, right? And like I say, I just recently relaunched the course with a few changes in order to make it even more objective than it already was. Yeah, so there you go. And if you'd like more information on this trade setup, I've put a link in the text below this video or in the email that you received, or you can email me personally. If you have any questions, I'd be happy to answer. Yeah, so thanks for watching, and hopefully you liked this video, and if so, I'd really appreciate a thumbs up by hitting the like button, and of course, be sure to subscribe to our channel. Then you get notified whenever we put out a new video. Just click there's a button in the lower right corner of the video. Alrighty, there we go. I hope you guys all have a great trading week ahead. Take care.